Hey everybody, this is the Chapple Show, and this is one of the most important videos that millennials can watch regarding their financial education. And I call this talk how a few percentage points can change your life, and they truly can. They can be the difference between you being poor for the rest of your life and you being super rich and being the most wealthy person you know. This could be, so it's very important to watch this video. I have a lot of videos on my channel. This is probably right now the most important one that you can watch. So just stay tuned. If you have any questions, by the way, send them to Chapple on Twitter, at Chapple or just follow me on Facebook, Chapplerei. Anyways, we're gonna get to this talk right now. So if you have any questions about any video topics too, send them to me. So we have ROI here. We have time and we have money. What does that mean? What does that mean? So ROI is return on investment. So let's just say you're a millennial, you're 18 to 31 years old. If you're 18, you probably don't have $10,000 saved up. But let's just say you're 25 years old, you've been working for 3, 4, 5 years, something like that. And you've somehow saved up $10,000, even though most people that are millennials have nowhere close to that amount of money, which is dumb because people don't know how to save, they just spend all their money. So you have $10,000 to invest somehow. You have time, so you have investments after 10, 20, 30, 40, 50 years, and you have return on investment. So 0.5% return on investment would mean that you make 50 bucks a year on your $10,000 investment. That's what an ROI means. So just doing the math, 4% would mean you would get 400 bucks, and doing the math correctly there, right? Yeah, you'd make $400 on $10,000. 12% would mean that you would make about $1,200 on a $10,000 investment per year, or after 1 year. But if you reinvest that, something magical happens here. So a 0.5% return on investment. Most millennials don't invest their money, and they put it into two things. They put it into a checking or savings account, which is stupid for the most part. Checking accounts will give you a 0.1% interest rate right now in some areas. Some it's 0.5%, some it's 1%. But most savings accounts, they're 0.5%, 1%, 2%. It's pretty much nothing right now. When I was a kid, that was like 8, 10, 15%. Right? But most people, when they're millennials, they don't take their money out of there. Some people put it into some RRSP or whatever. And that's too safe. Right? You can't access your money. That's a whole different video. So let's just say you have $10,000 to invest. After 10 years, how much would that investment be? We're just kind of rounding here. It's about $10,500. So you made $500 after 10 years, which is, it's not very good. Now, let's just say you reinvested that $500 you just made, and there's no fees. How much money would you have after 20 years? Well, that's about $11,050. Oh, you made $550. Now we're rolling here. Not really. Now, after 30 years, if you reinvested that extra $550, it would be $11,614. Okay, I'm going to go through these really quick here, so it won't get too repetitive or boring. So after 40 years, $12,200. And after 50 years, what's the number here? $12,830. If you keep your money in your checking account or a savings account for 50 years and there's 10 grand in there, you'll have made a grand total, maybe I should write these here at the bottom, a grand total of positive $2,830. Are you proud of yourself for your investing ability? I wouldn't be at all. That's not a good return after 50 years of a $10,000 investment. So that's what happens if you don't invest your money, people. You make $2,000 over the course of its lifetime, accounting for inflation. Now, we have this lovely 4% over here. So 4%, what is a 4% return? So this is, to me, this is not a good investor to an average investor. So this is a bad to average investor. I mean, 4%, it's better than nothing, but like I can do better and I'm 22. So this is a bad to average investor over here. And this is, I'm talking specifically about stocks. So if you put your money, or stocks or bonds, I should say, but bonds right now aren't giving a 4% return. They just aren't, they're giving like 2%. So, okay, so you have a 4% return per year. Now, what'll it get you after 10 years? Assuming you reinvest all your money. Well, already after 10 years, just by having a 4% and actually investing your money, you'll have $14,800. You've already made more than if you kept money in your checking account for 50 years, your entire lifetime. All right? That's why you should invest, people. I don't even have to, I'm going to do the rest of this. I'm going to show you the glory of investing smart. But if you are, pardon my language here, but if you are a shitty investor, it's better than doing nothing with your money for the most part, unless you lose money on your investments. But if you do that, you've obviously not been watching my stuff. So now after 20 years, that number jumps to $21,900. Bam, that's looking pretty good right now. After 30, it's 32, what was it, 32,433. That's looking pretty good. Sorry for my bad writing. Now we're getting up here. After 40 years, it's 48 grand. Is that right? Man, you're pulling in some cake right now, right? And now after 50 years, you have a lovely $71,000. 3.5 percentage points is equivalent to, let's see, so at the end here, you're making $61,000 over 50 years, which that's good. Like that's on $10,000, that's good. Excuse me. Time is your best friend for investing. If you do it properly, that's pretty good. Now 4% is, I think the average return on investment in the stock market, like historically over the past 100 years, it's around 5 or 6%, I think. I think it's around 5. I'm gonna have to double check that right now. But yeah, like that's already a $59,000 difference there. $58,170 difference between this and this over your lifetime. But now we're gonna get into smart investing. Now hold on to your fucking horses here. Okay, this is great. Sorry for the swearing. I'm gonna start swearing in my videos now, by the way, just because that's what happens. Not too much, but a little bit. So this is a 7% return is just, you're a solid, good investor. They're just, whatever you're investing in, it could be stocks, it could be real estate, it could be whatever, right? Stocks, property, companies, whatever. Direct capital investments. You're a good investor if you can get 7% return. 6% is like the cutoff for me between being a good and average investor. If you can make more 6%, you're fantastic, you're good, you're doing well. Now saying that, I've had, in the stock market, you know, I say that I researched a lot and people say that I was lucky, and I probably was a little bit lucky, but you know, there was a year where I had like a 30 to 40% return, which was because I hit a home run on Apple and Nike in 1 year, and what was the other one? There was one more, I forget though. I talk about that in all my videos though. I'm very proud of that because I did a lot of research and it was a long story. Anyways, so 7% return, okay? What'll it get you after 10 years? Well, that number is, wow, I had to double check. I was like, wow, he's doing pretty good. That'll get you 20 grand. 20 grand after 10 years. Now look at that already, 20 grand, okay, cool. This is 40,000 after 20. All right, I'm rounding here, so just stick with me. After 30, it's 80 grand. Oh, it's doubling every year. It's about 160,000 after 40 years, and after 50 years of reinvesting your hard-earned money, you make 320 grand total. That's your total investment's worth. So you'll have made, Yeah, $310,000 on a $10,000 investment. Pretty good, right? Sounds good? That's like a house. You can buy a small house or a good, nice house in the middle of nowhere, or a small house in a nice city, if you can. In Toronto, even the smallest houses are like $1 million, which is kind of sad right now. But yeah, 320 grand, 50 years. Now that's if you're a good investor. Now this over here, this is what if you're a great investor. 12% is, you're pretty much, you gotta, it's not unheard of, but it is so hard to sustain that over 50 years. It's highly unlikely. You have to hit a bunch, you pretty much have to invest in like real estate in one area and have it hit a home run for you. Like some years you're gonna have to get a 30% return or something like that and have very little to no corrections. But you know what happens? New York, in Toronto, it's been pretty good in the past decade. It happens sometimes. Over 50 years, it's gonna be tough, but I believe in you. So this is if you are a great investor, you're great. And this is like, you can do it in the stock market, but that's really tough. So I'm gonna say stocks and real estate again. Stocks and property. Now that's a slash there. Now this is where shit gets crazy, okay? After 10 years, 25, oh shoot. It's $25,950. Already you're seeing how much a few percentage points can do, right? $25,950 after 10 years. Okay, that's great. So 20 years, it is 60, sorry, I have it written down here, 67,275. 275. I'm getting low here. I'm gonna have to bend down. Ugh. Okay. And then after 30 years, it is 174,500. And guess what? We still got 20 years to go. And you're at $174,500 of compound interest. So 40 years, it is 452,000. Ow, I just hit my 450. I just hit my my foot on the table here. I'm rounding here, $452,000. And after 50 years, guess what the number is? I'll tell you. So it is, we'll get low here, $1,173,000. A net of $1,172,000. Get that in there. That looks really weird for $1 million. Got to separate that and put some commas in there. Yeah. Whew. See what can happen when you invest? Now, 12% return is, as I said, that's crazy. 7% is doable. For most people, if you're smart, 4% you should do. Even if you're a dumbass, you should be able to do that. So this is why it's so important for millennials and people my age. I'm 22, and people 25 years old that have money saved, people 30 that have money saved. Over the course of your lifetime, this is your retirement fund. You can control it yourself. You don't got to give it to the government or put it with some financial planner. Honestly, if you do your homework, you have money available to you and you have full control over it. It'll give you the returns that you want. If you invest it with some investment company or some bank or something like that, they take fees. It's usually around 1% to 2% of your total fund per year, which is a shit ton. It's too much for me. So that's why I wanted to invest with myself, because I was looking at some ETFs, some exchange traded funds, and they were taking like 2%, 1.5 to 2% of whatever your investment is per year. So meaning that if you had a 4% return, your return's actually like 3 to 2%. Like, that's terrible. That's a big difference over 50 years. Excuse me, I burped on camera during a video. How lovely is that? So if you invest properly, imagine if this number, if you had made a lot of money, you're an educated person, you have a good job where you make 50 grand a year, you save 7 a year. Maybe you have 20, 30, $40,000 to invest. Imagine what that could easily here, if you invest well, you could be a millionaire by just making a simple investment when you're 25 to 30 years old. If you keep it in your checking account, in your savings account, give it to government bonds, nothing's gonna happen for you. You're gonna unless you have a high income, you're gonna die poor. It's just the way it is. So, anyways, I think that's gonna wrap up this video. I'm glad I did this talk, to be honest, because this is I call this how a few percentage points can change your life, but this is pretty much explaining compound interest to the masses and how it would relate to you. Yeah. I hope you enjoyed this kind of education talk here. And I'd like to thank you very much for watching. Remember, send in your questions. Please send in your questions. I made a video where I talked about a tweet that I got and one of the tons of emails that I got. Okay, so I need to talk about this quickly before I go. I mentioned it in my other videos. If you have any questions that you would want in a video, make sure to tweet them at me at JackChapplesci. I'll leave a link in the description. Tweet them at me, okay? And I will almost 100% bring them up in one of my casual videos or podcasts. Now, you can also do it on Facebook. Send me a Facebook message on CHAPPLEREI. I'll leave a link in the description for that. So send me a message there. You can email me. I just get so many emails every day from you guys too. Like I get at least an email a day from you guys at some point on one of my accounts. And yeah, I can't answer them all. I try my best to answer them all, but sometimes I can't. Sometimes the questions are so good that I have to put them in a video or make a video about them. But just tweet me your questions, guys. That's just the way it should be. So anyways, thank you very much for watching or listening. If you're on the podcast, go check out the podcast on my website. Links in the description below. You're all very beautiful people, and I'll see you guys next time.